Ron Clayton is our marketing analyst this week. As much as crop growers are probably itching to get this year's seed in the ground, one might argue livestock producers are rooting for ideal conditions more than anyone. A big corn crop could do wonders for feedlot and finishing profit margins. When we talked with Ron Wednesday afternoon, he said the break-even marks for hog producers were already high as markets seem to be held down.
Well, Jeff, we're not doing real good. Carcass prices for hogs are in the mid-70s now. Tad bit better than where we were a month ago, not as good as we were a year ago. Been disappointing so far, but we should start to see some price improvement as we move through May.
Does that surprise you? Did you think it would be better than this?
Yes, it did. We're not doing so well on the demand side, and then pork production's up a bit more than we thought. Gosh, given the drought last year and high feed costs, we were looking for a bit more of a cutback in the swine herd than we ended up getting. And
instead, what happened? Did people foresee maybe big corn acres this spring?
It sure looks like it. They just hung on to those hogs, and certainly we planted most acres last year since 1937, probably more this year. And so if we can get some decent weather, we should see a lot lower feed costs. And looks like hog producers hung on in anticipation of that.
Yeah, I'll ask you about that in a second, but let's get back to demand. Where do you point your finger as to why it hasn't taken off, and do you think it can here as we start to enter grilling season? Beef is going to be competitive as well as you look at the price there, and then low gas prices would certainly put some more dollars in the customers' pockets.
Sure, Jeff, you're absolutely right. One thing is we can cross our fingers and hope the weather gets better. It's been a cool, wet spring. That doesn't put a lot of people out in the backyard grilling. Hopefully we'll see some stronger domestic demand and better weather. Exports are real disappointing so far, Jeff. We're down about 14% in pork exports compared to a year ago, and we may not rebound a whole lot from that. World pork production is expected to be up almost 2% this year. And when your foreign customers have more pork domestically, it probably means they're going to buy a little bit less from us.
Any reason that those numbers are up?
Well, you wouldn't have thought
that is.
You wouldn't have thought so, given the feed costs here and around the world, but long-term trend has been expanding meat production around the world. The economy of a lot of the developing countries is doing quite well, and they're following through with larger livestock herds.
What about the strength of the U.S. dollar? How is that impacting that trade balance?
Yeah, well, in recent months, the dollar's been getting stronger, and that's not good news if you're trying to export U.S. products. The stronger the U.S. dollar is, the more expensive U.S. products look, and so for pork, that's worrisome.
Sort of a macro question, but do you think the dollar continues to be strong?
Well, it kind of looks like it. The Bank of Japan is expanding their money supply quite fast. The European Euro's got struggles. So relative to other major currencies, we've got our problems too, but still looks like the dollar could continue to increase in value for the next several months.
All right, what are your concerns for the 2013 planting season? I know the last few times we've talked about maybe an expansion here in the U.S., but obviously that depends on large corn production. What are your concerns as we go into planting here?
Well, it's flipped dramatically, Jeff. Gosh, 6 weeks ago, and everybody was talking about drought, and now we've gotten quite a bit of moisture and rain, at least Missouri and Illinois, and so planting is late. It's cool. We need some drier, sunnier days and get the corn in the ground. Otherwise, you start to, as you get towards the tail end of the season, start losing corn acres to bean acres.
Yeah, and do you start to worry about that overall production at least now?
Well, it's a little bit early yet. It's still April, but if we haven't got a lot more corn in the ground by the first week of May, then yes, you can start to worry about reduced yields.
To that extent, does that play through into any sort of expansion? What are you seeing in sow numbers? Are there more intended farrowings?
Well, USDA's last quarterly survey predicted that spring and summer farrowings would be down a short 1%. Given the fact we usually run about 1% more pigs per litter, that'll give us about the same pig crop as a year ago. Now, one of the other things we're anticipating is heavier weights. Last summer was miserably hot. Pigs don't like that. If we can get a little more normal summer, then we should see heavier weights on these pigs, and that'll add to pork tonnage on the market.
Where do we stand right now for a break even, and where do you think it could go?
Well, on a carcass basis, mid-90s is what it takes to cover all the cost of production. We should see that decline if we can get good weather and lower feed costs. That could drop down and give us break-evens around 80 cents per pound of carcass by the end of the year, hopefully.
That 90 doesn't leave much meat on the bone there for the producer, does it?
No, right now we may struggle to have one profitable month this year.
Oof. All right, what do you look for overall prices here in the hog market as we go forward to the next month or two?
Well, if the weather behaves itself, get some stronger domestic demand, I'm hoping we can get some $90 carcass prices at least a few days this summer. The peak maybe July, possibly as late as August this year. Then seasonally we tend to decline, probably see hog prices back in the mid to lower 70s by early December.